Health Insurance is what we're looking at. The company reported a stable performance in Q4. Net earned premium as well as gross written premium saw a good double-digit growth. The company is guided for improved combined ratios in FY24 and higher than industry premium growth. Anand Roy, who's the managing director at Star Health and Allied Insurance, joins us now to talk about that. Anand, thanks a lot for joining in. If we can just start, it was a stable performance this time around, but I'm trying to look ahead. What kind of premium growth are you looking at for FY24? And are you expecting the growth to come in from value or from volume?
Morning, Sonia, and thanks for having me. Always a pleasure to be on your show. Yes, we have had a satisfying performance in the last financial year. We were able to meet the guidance that we had given to the markets as far as our growth is concerned. In terms of our retail performance, we grew at 18%, which is almost 20% faster than the industry's growth. We were also able to deliver our lifetime highest net profits. We were able to deliver a profit of about 620 crores for the financial year. And of course, the guidance that we gave on our overall operating cost of 95%, we were able to meet that. So overall, it was a satisfying year. As far as this year is concerned, we have very aggressive plans to grow faster. As I told you, our growth was a little muted in the last year because of a group policy strategy that we had, and that has played out. So this year, we expect that, we should be growing at 20% plus for the year, which will be faster than the industry's growth.
20% premium growth, Anand, in FY24?
That's correct. That's correct, Prashant.
Okay. And you're saying that the reliance on group policy continues to come off faster?
Yes, so that has happened over the last 12 months. This year, the strategy is to focus on the small and medium enterprises groups, which will contribute around 10% of our overall GWP. But it will be the selected segments that we want to participate in.
Okay, all right. Hi, Anand. Good morning. Anand, what kind of a price hike are you baking in for this year, if you could tell us that? And also run us through your loss ratio. I think the claim ratio, I think you were guiding that it'll move around from here. What is the number we should work with for FY24?
So, Nigel, the loss ratios will hover around 63 to 65%. We have taken a price hike in one of our leading products, as we discussed in the last meeting. That's our Family Health Optima. We have taken a 25% price hike, and that will play out over the next 12 to 15 months when the renewals come up for the customers. So we expect that the loss ratio should hover between 63 to 65%. But probably because of the price hikes and other underwriting strategies that we have, at the lower end of the band of 63 to 65%. That's what I would expect it to.
Okay. And I also want to understand what is the retail market share that you're targeting for the end of FY24? I think you're sitting at somewhere around 33, 34% currently. What would the strategy be to grow your retail market share, and what's the guidance?
Yes, Sonia, for the last 2 years, if you look at the numbers, we have grown from 31% market share to 34% market share. And that's something that we really are focusing on to keep on increasing our retail market share. So we expect that these market share will grow by 100 or 200 basis points every year as we keep growing faster than the industry. I think that will be the focus area.
All right. So you'll end this year with closer to around 35% odd, right? From 34, you're at least 35% is what you're looking at.
Yes, that's right.
Okay. All right. Also tell us a little bit more about your mix. You wanted to increase, I think, your share of specialized products. And I think it was at around the mid-teens. Where do you see that number headed?
So, Nigel, the specialized products are products which are basically trying to cover individuals who otherwise could not get a health insurance normally. Probably the senior citizens, people who are living with pre-existing ailments, and so on and so forth. That's definitely our focus area. We are looking at creating new distribution channels for that specialized products. Probably we will be partnering with our hospital networks to find out how we can distribute these specialized products through those networks. We are talking to a lot of insurtech firms on distribution through online pharmacy chains and so on. So this will be our focus area. We have increased the contribution from 11% to 15% and we expect that, over the next few years, this will keep on increasing.
Another on expenses, I mean, these new regulations, expensive management, etc., is everything settled, and what should we expect? It's a question which we come back to. But if you can provide us with some sense for FY24.
So Prashant, I think this is one of the advanced thoughts that the regulator has in terms of increasing the penetration of insurance in India, and the expense of management norms which has now been articulated is very, very beneficial for all the players and all the stakeholders. As far as Star Health is concerned, we probably are having a benefit in the sense that the allowable expense of management provides us headroom up to 35%. We have one of the most frugal operating expenses in the entire industry. We are operating at less than 30% right now. So we will take, strategic calls where to go more aggressive, since we do have a headroom for increasing, our, expenses on certain areas. But having said that, the company is more focused on increasing the retail market share, and that's where our focus would be.
So your group business, you said that you will grow it from currently, I think it's about 6% of your total business. You're looking to grow it to 10%. That's by FY24, correct? And then eventually, what is the long-term plan with the group business?
So the group strategy will remain to be around 10%. And there are two segments in the group business. One is which are the corporate groups, which is largely, that is the area where we are more selective. And then we do have our groups coming from bancassurance partners. That will continue to grow fast, but the corporate groups will be very selective.
Okay, we will end the conversation on that note. Thank you for giving us all of those details. So expect their market share to go up. They're also looking at 20% premium growth in FY24. Their market share, in fact, has risen in the recent past from 31% to 34% in the retail space, and they're looking to raise it further.